All right. Uh, so the market is flying right now, near all-time highs. And this week, I believe on Wednesday, we what the percentage on Polygraph or whatever of expected rate cuts, I think is close to 100% at this point.
Yep.
And people are now, in what I'm hearing, starting to chatter whether it's going to be a quarter or a full 50 basis points cut. Uh, but that's for, that's neither here nor there. We'll find out on Wednesday. It might be a volatile trading period. What we want to talk about is that, as always happens in the market, things come in cycles. And now, grandma and grandma's quilting friends are all asking about this investing thing. Of course, when things are at the peak. So we already know that this will not end terribly well for those who are sort of riding the hype, right? That aren't doing the investing properly. So we want to somehow frame this as a not just a warning, but we're picking up stuff about greed and hubris in these kinds of moments, and we want to walk you through maybe a better way to think about this. So, Badge, take us to what you observed and what you want to say about it.
Yeah, and I suppose maybe to intro this, like I'm seeing some sentiment in a couple of the investing communities that I kind of lurk around in. And actually, frankly, it reminds me of myself back in 2020, 2021. Um, and I learned a hard lesson. And so I suppose, yeah, like it's one of our laws of the jungle. Thinking you're smarter than the pack is dangerous. And I'm not picking on this guy or girl, but I'm picking just one narrative. But there are many. I've seen like a lot of people who think they think they're like investing geniuses. Like right now, it's very hard if you're like an investor and if you're like pretty much like a long investor as opposed to taking like weird derivatives and short positions. If you're kind of long only, it's kind of hard not to make money, right? Everything is going up. And the quality and the great stuff is going up, and the dumb shit is going up. Everything is going up. And so I'm just going to pick on this one particular character, but like I'm seeing this in a lot of places. So this individual started managing their own investments in January 2024. I think probably I get the impression from reading some of their posts in this community, like they've been an investor for a long time, but kind of ETFs and indexes. So coming up for about a year and 3/4, 2 years, where we'll say he is like now hands on and picking his own stocks with some proportion of his portfolio, and he's on track for 100% gain over 2 years, which is great. Like that's like everything's going up, everybody's doing well, but 100% gain in 2 years, like that's a good return. That's absolutely market beating. Like good job. And maybe just to kind of call out two good things that I really liked in the way this conversation was framed. Um, like solid portfolio, avoiding capital gains tax. So, using the right structures. And that's been like a rocket ship for me over the last 22 years. Like not having capital gains tax on my returns has really, like now compounding is really, really like a steamroller for me. Like that, those tax breaks are very significant. And then the other thing I think is good is this, like this individual said, like, quote, I believe I can easily outperform a financial advisor. And that might sound like boastfulness, but actually that is the truth, right? If you manage your own investments and if you're smart, you can beat the market, you can beat financial advisors because their incentives are totally wrong. So these are all really good things. But in the last couple of days, I saw a couple of quotes that made me go, whoa, like this is dangerous stuff. Um, One in particular, so this guy posted, I believe I have a gift for finding the gems. um, they also posted like some real numbers. Like I'm always talking about percentage allocations and percentage gain. I think just if people who post like real dollar numbers, like I went from X dollars to Y dollars, that's great. Like well done. You've now got like a really substantial portfolio, but there's like an element there of like pride comes before fall. And like kind of boastfulness. And it's not that the thing, it's like the achievement is fantastic, well done. But when you're kind of flaunting big numbers like that, that probably says something about, your the way you're feeling like you're just the best. Um, and then the thing that triggered me into saying we should talk about this on the podcast was just a comment over the weekend, I think, where this person was being like challenged by other folk in the community, and they said, "My, I'm good. My plan is to go to cash ahead of a correction and pounce on discounted prices. Like if investing was that easy, like none of us would ever suffer drawdowns." And so let me just sort of make this personal because I don't want to attack this individual. Right, this is how I felt in 2020 and 2021. Like in 2020, I was in kind of COVID stocks and like Zoom and things like that. I did my best annual return of all time, like 90 something percent. I nearly doubled my portfolio. In 2021, I had like a good market beating, but not like crazy, but market beating return. And I look back and I went, I've got enough now. I'm going to quit my day job. And I became essentially a professional investor. Like this is how I now run my life. And then I took, within 6 months of quitting my day job, I took a near like 40% drawdown in my portfolio. And I had got lucky, more than luck, more than judgment. I think I've said this many times before. Like I did go to cash quite heavily just before the correction, probably more luck than judgment for different reasons. Um, so I didn't take it as I didn't get hit as bad as I could have been hit. But if you think you can like time a correction, I don't believe I can time a correction successfully. I think most people would admit to that. If this guy, or if many people think I'm a genius, I can time my way out, I can miss the downside, I've captured the upside. Like this, if this is the first time at some point we're going to hit a bear market, I don't know if it's like tomorrow or in 5 years' time, at some point it's going to happen. If you haven't experienced that, it's going to be like a reckoning and it's going to be painful. And I think it's good to just sort of get your head in that mindset of, I'm not a genius. I've been quite lucky. I've made some good decisions. Um, but, I'm ready for whatever the market can throw at me.
Oh my goodness, so much wisdom coming out of you. Let me back you up and then maybe throw a couple of contrary points badge your way. One, Monkey just spent some time in Greece, and in Greece, that's where the Greeks staged on stage tragedies to help the Athenians see visually for themselves just how badly the gods could fuck with you or the whole city, in ways that are absolutely horrific and that you had no control over in one sense, so that people could be more humble and sort of accept the vagaries of life, as opposed to hide from them, So that's like a thing, right? Go read your Greek tragedies, friend. Seriously, seriously, like go read one of them. Go to what's it called, Oedipus, if you need, if you haven't read anything. So that's point one. Hubris, bad. Uh, Two, uh, this one of our laws of the jungle, I think, is there for absolutely good reason. All of them are there for good reason. The If you think you're smarter than the pack, well, it's dangerous to think you're smarter than the pack. I just want to again qualify that's true. I would say, what, 87% of the time. Where it's not true is where you have committed yourself to studying some industry on a tiny granular level, and you've bought subscriptions to like the digests of whatever field you're looking into, whether it's biotech or the AI computing world or the whatever, and you have literally through professional exposure, um, you've gained more knowledge and understanding than whatever is floating on the surface of, you know, chitter chatter. And you're making some investment decisions that are contrary because you really do know something that most people don't. And that's, often you see that in the small caps and the maybe even in the mid caps, where you can squeeze out alpha from a gap in understanding. But I still think that's a little different than hubris, right? That's I don't think that's you thinking you're better than the market or you're a genius. You've just done work and you know more.
Right.
Um, so that's two. Three, I love the signal you picked up on, like a good poker player, because you're using your poker skills, right, to read people. And you're seeing some of these signs that are like, oh, this isn't exactly somebody merely just managing their money. Now they're posting their real gains. And so, two things about that, right? Because we talked about this ourselves. It's, I think, just basic etiquette in the finance world to not use real money for many reasons, but percentages are actually more signal than noise.
Yeah.
Because in the percentage point, it doesn't matter if you have 1,000 or 10 million, it's the same amount, right? So nobody gets discouraged, and it's right. It's just the more professional way to do it.
Yeah.
So I think you're right to say real money amounts in this case point to hubris. Therefore, this guy's or gal is in danger.
Yeah.
Accepted. What's interesting to me is that you and I talked about this, that there is, because we do the King of the Jungle portfolio and we started with a mere $1,000, mere, I mean, I don't know, for some people that also might be a lot. That some people weren't taking our portfolio seriously because, oh, these guys are only starting with 1,000. And there was a case to be made. Well, what if we posted our real amounts and now we're talking about whatever the real amounts would be, but they're certainly larger than the 1,000? Maybe we would be taken more seriously. Like, oh, these guys aren't just monkeying around, though I'm definitely always monkeying around. I'm sorry. It's just I was born this way. Listen to your Lady Gaga to understand. um, so I'm a little bit torn about this, and there are some, I think, people on the X I follow that I think aren't starting from mere hubris, but they're posting larger amounts. So there's a little bit of more credibility there, maybe. But that said, uh, uh, I don't know. It's a little bit of a mix, and I'm left torn. I'm left torn about the. It's kind of maybe I come back to know why you're posting real dollar amounts if that's the route you choose, and all things else being considered equal, be courteous and don't do that. Don't do that.
Yeah, I suppose that's like, and the reason I pointed that out was because as you've identified, like it's an insight into this person's thinking, and it's like the danger, right? And this is the reason we want to talk about this segment on the podcast this week, because to some extent, probably all of us are thinking like we're investing geniuses right now with valuations and like the way stocks have gone. If you're invested in quantum computing stocks, you feel like you're a genius. And I might believe that that's complete garbage. You think like there's a case to be made for investing in them, but regardless, right? You made a shit ton of money even in the last 24 hours on your stocks, right? So you're feeling like a genius. And so, kind of, what's the lesson from times like this? Like, it's when markets are richly valued and high and everything is like buzzing, those are the times to be cautious and be wary and actually do much more work. Like, it's almost counterintuitive when valuations are depressed and everything you invest in is losing money because, like, you're on the way down. In some ways, like, they're the easiest times because you just you try and you find some good quality companies, you buy them, and in some ways you just kind of turn off and just go and do something else with your life, right? And then wait for the cycle to come back, and for those like cheap stuff you bought to hopefully turn around if it's good quality. But when stuff is like right now, when valuations feel like they're not everything is egregious, I think like Palantir and CrowdStrike and Axon, those stocks in my portfolio, I think they are fairly egregiously valued. But I've got other stuff that's reasonably valued, like Alphabet, even though it's like the market's coming to that realization. But it's like those richly valued stocks, they're the ones I'm giving a lot of attention to and looking at almost weekly just to see like what's the trajectory here, what do the valuations look like, should I be trimming, should I be preparing myself? And I'm always asking myself that question. Like I've got uh, now Rocket Lab all-time high in the last one trading day on Friday. um, I've got it's now the biggest allocation in my portfolio by some margin, even more than cash. And I've got a chunk of cash. I think that's like my portfolio is like 16% Rocket Lab right now. So I'm asking myself the question almost every day: if that halved in value overnight, how would I feel? And like if it's going to impact me, which it probably will, for that to go from like 16% down to an 8% allocation because I just got smashed, well, that probably tells me I should sell some Rocket Lab. And I've made a very structured decision around how I'm going to manage that position because I'm preparing to start trimming it. Yeah, and then maybe trimming is not the right answer. I don't know. But I'm just trying to be thoughtful about it. I'm not coming from the perspective of Rocket Lab's gone sky high. I'm a genius. I cannot be beaten. I'm the greatest investor in the world because that is going to crush you when the market gives you a slap around the face, which it will at some point.
Yes, Badge, I have an answer for you. If Rocket Lab fell 50% and you said, "How will I feel?" Uh, you won't feel that great.
Yeah, no, for real. Yeah,
This is
yeah,
my crystal ball. It
yeah.
wouldn't feel that great. But here's the difference between you and our buddy is that you, despite not feeling great, you would not catastrophize and you would not panic sell or whatever the panicky decision might be. And you would actually, in the end, take advantage of the situation by knowing whether it's time or when it's time to add more or whatever the case may be. Somebody coming from the hubris position, they actually might employ catastrophic thinking. And once you cross a certain psychological line, you it's actually pretty dark.
Hmm,
We've been there in different, in different moments, in different degrees. You go from being a genius to the complete opposite, saying you know nothing, everything was a hoax, everything is a fraud, you can't trust anything, this investing stuff doesn't work, you drop out, you sell at the low,
yeah,
and you're back to a very bad place financially. So
yeah.
that's point one. Point two, Badge, is I think we should devote an upcoming episode to strategies that are, I think of them as insurance strategies. And I've done quite some work over the years learning how to use options as insurance, for example. And so after a certain point, preview, like we have insurance on our house and our car. It's money you expect to go to zero, but having it is a worthwhile investment because the way insurance works, right? So that's for another episode. Let us know maybe in the comments on patreon.com/Wall Street Wildlife what your own experience has been or experience or strategies managing upcoming potential downsides. How do you negotiate the flip side of the coin? And then we'll maybe make an episode segment out of it in the future.
Good stuff. Great. Yeah. Okay. I think we landed our lesson. And like I say, like we're not saying the market is going to crash. We're not saying you go to cash and you should trim. We're just saying, like, have all of these potential outcomes in mind and, try and be balanced with your emotions, not uh, overexcited, because that is going to lead to doom.
Yes.